Malaysia's cabinet has given its nod for the termination of the land lease agreement between FGV and the Federal Land Development Authority. Minister in the Prime Minister's office, Datuk Sri Mustafa Mohamad, said in a statement that the contract termination is one of several recommendations made by the special task force set up to address Felda's issues. Among the main issues identified in Felda include its weak capital structure and massive 10.6 billion ringgit debts. Mustafa also noted Felda's declining sources of income, especially the receipt of lease payments of 351 hectares of farmland, as well as lower than expected profit sharing under the LLA. He said the weakness in governance and financial management also contributed to Felda's woes. Meanwhile, the cabinet has also approved a proposed government-guaranteed suku issuance by Felda worth 9.9 billion ringgit as part of its recovery plan. With the initiatives, Felda is expected to be cash flow positive starting 2023 and return to its roots as a respected and viable agency. Standard Chartered Bank expects Bank Negara Malaysia to slash the overnight policy rate by another 25 basis points in the next Monetary Policy Committee meeting on November 3rd. In its note today, StanChart said the enforcement of CMCO 2.0 might require renewed focus on growth support amid a sharp rise of COVID-19 infections in the country. It added that the government's move to extend the CMCO to November 9th could threaten the lower bound of Putrajaya's 2020 GDP growth forecast of -3.5% to -5.5%. While further rate cuts might not boost investment activities, StanChart said, however, a lower interest rate would mean lower financing costs and further cash buffer for households. The OPR now stands at 1.75% after 4 rounds of rate cuts this year alone. The Securities Commission Malaysia's amended guidelines on digital assets to regulate initial exchange offerings and digital asset custodians came into force today. SC said in a statement that the guidelines will facilitate its objectives to promote responsible innovation in the digital asset space while also managing emerging risk and safeguarding issuers' and investors' interests. The regulator had in January announced a framework to enable companies to raise funds by issuing digital tokens in Malaysia via an IEO platform registered by the SC. Among the rules set in the guidelines are that IEO platform operators will need to conduct the necessary due diligence on the issuer and ensure that the issuer is able to comply with the requirements of the guidelines as well as the SC's guidelines on prevention of money laundering and terrorism financing. Also included are rules and regulations on DAC to facilitate interested parties who wish to provide custody services for digital assets. CGSC IMB research says retail investors are motivated to invest more in the stock market as the CMCO keeps them homebound. Based on its statistics, retail participation on Bursa Malaysia increased last week, with average daily turnover volume rising 32% week-on-week to 8.6 billion units and value improving 19% to 5.2 billion ringgit. Retail investors' share of total trading value grew to 38% from 34.7% in the previous week, followed by institutional investors at 22.7%, proprietary trade at 20.2%, and nominees at 19.1%. Not only did retail investors' participation increase, there were the sole net buyers of Malaysian equities despite rising political uncertainties, which CGSC IMB said could be a sign of higher risk appetite and liquidity. Stocks that these retail investors were actively acquiring include consumer, industrial and property, and healthcare. LOTT Chemical Titan's 3Q net profit fell 13.7% year-on-year to 78.77 million ringgit from 91.3 million ringgit. This was no thanks to lower revenue, higher share of associate losses, as well as higher operating cost resulting from the impact of Hurricane Laura. The storm had in August swept through Louisiana, where LOTT Chemical USA's petrochemical facility is located. Meanwhile, quarterly revenue was 10.5% lower at 1.94 billion ringgit from 2.17 billion ringgit a year earlier. In its board's filing, the group explained that it saw a loss before tax of 17.7 million ringgit from its olefins and derivatives segment on lower average selling prices. However, profit before tax for polyolefin products was up almost fourfold year-on-year to 216 million ringgit as margin spread improved on the back of lower feedstock cost. In a separate statement, LOTT's president and CEO Dr. Lee Dong-woo said the group's operational performance has turned around since it returned to the black. To ride through these challenging times, he said LOTT Chemical Titan's long-term strategy is to increase output by optimizing its plant operations, improve competitiveness, and enhance business sustainability and governance.